Hi everyone, hope you're doing well and welcome in this video today where we're going to talk about DraftKings and its monster move that it made on Friday. Before we do that, let's just talk about the market in general and portfolios in general. Wow, what a week in the stock market. I'm up something like 12% last week alone. My portfolio's up 12% in 1 week, which is insane. Absolutely crazy move, and I'm absolutely buzzing. I'm ecstatic, you know. I hope it's the same for you guys. I mean, I know I bang on about it, but 2022 me would be so pissed off if I didn't keep saying like, this is great. You know, to go through those dips in 2022 where it was just red day after red day for a year and a half, getting absolutely bashed about Hims and Hers being down at $3, DraftKings down being at $8, and just seeing so many stocks that we just persistently kept buying through those dips because the financials were good, and now we're getting the mega rewards. I mean, 12% in 1 week is just insane. You know, the money that I've never seen me make that much money in 1 week in the stock market. I mean, obviously, you know, some of it is paper gains, but just to see that amount of money that is being made is just so good. It's a good feeling, and I hope it's the same for you guys. I mean, obviously, you know, DraftKings up 15% yesterday alone, and apologies I didn't do this video yesterday. It was just a really busy day. Last term as well at work for me personally, always a busy one, and then obviously Valentine's Day. I think it'd be a bit unfair on my missus, the amount of times that I come home from work and then I'm like, right, I got to go do some stock market work. I'll come back in 3 or 4 hours time. I thought today is probably not the day that I can do that one to her, but there was part of me thinking I want to talk about this 15% jump in DraftKings, to be fair, but I thought, you know what, I'll just do it Saturday for you guys. I'm sure you don't mind. But yeah, DraftKings up 15% yesterday. That's just absolutely mental. I mean, last week alone, DraftKings was up 15%. And year to date, DraftKings is now up 47% year to date. That is absolutely bonkers, you know, because not only is DraftKings, you know, my second largest position now up 47% year to date. I haven't really talked about it that much this year because I've been focused on Hims and Hers so much this year, which same again in the last 5 days, that's up 39% in the last 5 days. And we've been focused on this one so much because this one's up 139% year to date, that I've been talking about Hims and Hers so much that I've not even been talking about DraftKings at all, which is just, you know, when you got your top two holdings up 47% and 139% year to date, that's how you can have such a great year so far. Yeah, I can't exactly remember how much the portfolio is up year to date, but it's in the 20% range. No, it's not. It could be even more than that. It's up mega amounts. So yeah, it's great, isn't it? It's absolutely great. I really hope you guys are having a good time as well at the moment. I mean, look at Meta. I mean, Meta's like my fourth largest holding in the portfolio. And right now, Meta is currently on a 20-day winning streak. Year-to-date, Meta is also, Meta is also up 22% as well. Oh, there's so many stocks flying out there, but today we're here to talk about DraftKings. Obviously, a really good move yesterday, 15%, and that adds on to the year-to-date performance of being up 47%. So yeah, really good year for the King so far. What was interesting is that it popped a little bit off earnings and then it rallied as the day went on. I don't know if that was just to do with the market, joining in with the market in general, or as the conference call went on and Jason Robbins started speaking. He's a really good talker, Jason Robbins, and as it went on, maybe he kind of added on to like everyone turning a bit more bullish, like, wow, this is actually really good from DraftKings. Maybe that was the kind of case there, I don't know, but we'll have a look anyway. So DraftKings reported earnings. I apologize, my Seeking Alpha subscription has run out, so I have to renew it, but you might be able to just read it here. Non-GAAP EPS was a beat by 0.10, which is probably the key thing. Everyone kind of focuses on DraftKings profitability a little bit more nowadays. And if I just go back and forward really quickly, you might have just seen it grew 13% year over year. So it was a slower period of time for DraftKings, as we know, because the sporting outcomes haven't been great for them. We've seen that mentioned by the likes of FanDuel, Flutter. They had to do a profit warning. The worst sporting outcomes, I believe, in 40 years, and we'll have a little bit more information about that in a second, but it was going to be a slower quarter for this period of time. But what we are doing, what we do as investors, is we look at the long-term game plan. We look at where the company's going in the future. We know that's happened now. We knew the outcomes were going to be weak 3 months ago. That's all priced in. We're looking at what's coming up ahead from DraftKings. And I think what happened with DraftKings is people got excited with what was coming up with DraftKings, and that's why the rally kind of kicked on as the earnings came out and the conference call went on. So little points out that I want to point out. So they did actually start doing their share repurchase program. This is one thing I was critical of them in the last earnings, if you remember correctly, is that they didn't start the buyback plan. It has started now, so that's really good to see them buying back shares. And even though we won't reduce the share count, what it'll do is it'll probably stop the diluting of the shares, which is really good to see. They did hike up the revenue guidance slightly, 50 million. I don't know if that's anything too major, but some little improvement there, as we probably see them to continue to improve that as the year goes on. I think they'll be probably a little bit more cautious considering what happened last year, where they hiked up the guidance, then them horrible sporting outcomes came and then they had to downgrade. So I think we're going to see them being a little bit more cautious with the start of the year, so maybe this one, Q1, Q2, and then I think we might see the bigger increases towards the back end of the year this time round, something just to kind of be aware of. And as well as that, probably in case there's any more increases of the taxes as well, I think they'll probably be a little bit more cautious of that going forward. So worth pointing that one out. Monthly unique players was an increase of 36%, which is good. Without the jackpot acquisition, they were still up 16%, so that is obviously great to see. Average revenue per user, probably the only negative that I picked up from the earnings. I don't think I've ever seen it ever decrease before, but it did this time. So you can see here there was a 16% decrease in the average revenue. Obviously, some of that was the jackpot customer acquisition, which is a lower average revenue. But even with that out, it still decreased 4%. So you don't want to see users spending a little less on your platform. That's only a little negative. I don't think I've ever seen that naturally go negative before. So let's keep an eye on that one. Obviously, the guidance now is pointing to a 35% revenue growth, which is obviously fantastic if they did 35% revenue growth. And as the year goes on, hopefully we see that hiked up. The range at the moment is between 32 to 38. So if they can come up with that 38% side of it, that would be absolutely amazing. Adjusted EBITDA is still to be maintained. Guidance at 900 million to 1 billion. I would think they're aiming to the 1 billion side of it. 1 billion EBITDA out of 26 million market cap, 26 times EBITDA for a company growing at 35%. Not too bad valuation in my opinion. You can make your own decisions up, but I think that's a pretty fair valuation for a company that has major growth drivers for many years. As long as these states start coming online still, that'll be great. The company guidance for 2025 does not include the benefit of year-to-date sporting outcomes. So this is the big thing. This is the big thing that the conference call focused on, is that at the moment we've just come off that awful Q4 where it was the worst sporting outcomes for a long time. Right now, at the moment, the sporting outcomes are very good, ahead of expectations good at the moment at the start of the year. And this is what we talk about. This is sometimes what you have to deal with this sort of platform, is there can be time periods where the sporting outcomes aren't great for the platform. You can have the time periods where they are absolutely fantastic for the platform. We have gone from one extreme to another extreme right now, and right now they're doing very good. So a lot of analysts were picking up on this and the good start to the year. At the moment, there's none of that being, well, not much reflected in the company's guidance. So hopefully, if it carries on having a normal, or we still keep a bit of a stronger outcomes, that is going to be very good for business that's currently not factored into the full year guidance. So all the people that threw the toys out the pram, there were some people on Twitter that did it. I saw that, they went, oh, look at this is a major issue for the business. I went, this is part and parcel of a betting company, guys. Over the long term, it'll neutralise. And some people sold the shares off the weaker outcomes, and they are missing the big rally at the moment because of that. Because the market's starting to think ahead now. The market's going, oh well, the sporting outcomes that we punished the stock for not too long ago, back around August time when it started, and October time when it started seeing those weaker outcomes started coming through. Then all of a sudden, now it's starting to price in the better outcomes. So yeah, that's obviously some of the future thinking that's kind of coming in here. Guidance still does not include any impact of mobile sports betting launches or iGaming launches, something to kind of make sure you point out there. Obviously, those are major growth drivers for them going forward. Maybe one of the other negatives that I didn't like is the increase of the costs. The last kind of year and a half, I felt like DraftKings got them really under control. There was a big increase in the sales and marketing, as you can see here. There was an increase in the product and technology as well, and G&A also. Now, obviously, the big thing is they've just made a big acquisition, so there is going to be some form of that on there at the moment, and we have to accept that because of the acquisition. Just keep it under control, please, Jason Robbins. Let's not go too, let's hopefully not go too crazy on these kind of costs here. So hopefully this is kind of just balancing the new state launches and the jackpot acquisition, and it kind of calms down a little bit there. Let's hope that happens. So they said that as well, they acquired 3.5 million new customers, and the key thing is at a record low customer acquisition cost. This is what also makes me think that a lot of it was because of the jackpot acquisition, because they're actually acquiring a lower amount overall, which is really, really good at the moment. The iGaming handle also increased 21% year over year. And as we spoke about earlier, the customer-friendly NFL outcomes were their most friendliest outcomes in 40 years as well, which is crazy. Promotional reinvestment declined nearly 200 basis points as well. So that's great to see. As we spoke about earlier, at the moment Q1 is off to a good start. I would not be too surprised if when we come back to Q1, we see these numbers hiked up a lot more than what they're suggesting at the moment at 30% year over year growth, because it looks very strong. They said that the Super Bowl was a successful event for DraftKings. Once again, DraftKings Sportsbook app came the #1 app in the sports category and the #3 across all apps during the Super Bowl. So DraftKings is still the #1 sporting app to go to during the Super Bowl period, which is great. So when people think about Super Bowl and they think I'm going to put a bet on it, the one they're going to is still DraftKings, which is great that they're still kind of keeping up there at the moment. They also set a daily record for sportsbook handle of 436 million, and once again they talked about bet mix was favourable as same game parlay handle increased approximately 40% year over year, which ultimately resulted in the highest sportsbook gross margin revenue day in the history of the company. Really good to see. Now, a lot of people like me are currently staring at DraftKings and going, can they hit that 1 billion EBITDA guidance that they're given? Because if they do, this stock is a pretty good value at the moment. And a few people thinking they can't get there. Now, actually looking at some of what they put out there during the investor presentation, this actually put it into perspective. Like, it's actually probably achievable that they could hit the full year guide that they're wanting to do, because we have the bad outcomes, or the bad sporting outcomes for them, and that was around about a 330 million impact. So if we go on the adjusted EBITDA of 181, 333 million on top, 514 million is where they probably could have been in 2024 without the bad sporting outcomes. That's a major jump from where they are at right now. So if they don't have the bad friendly outcomes for them again, they're already a good chunk of the way there. And then you already put on then a top, and let's not forget, I think adjusted EBITDA was negative last year as well, so that was a big improvement. And then you talk about the just natural improvement as they scale up of a 436 million. They could easily get to this 950 million midpoint. Like, I was thinking, you guys probably heard me last time I talked about DraftKings. I was like, if they hit these numbers, in my opinion, DraftKings goes to above an $80 stock this year. But can they get there? And you probably have heard me a while ago saying, I don't know if they can get to those numbers. Now, I'm actually looking at those numbers and I'm actually thinking they could do it. You know, if the sporting outcomes are pretty good, you look at the natural improvement in EBITDA from last year, as they scale up 436 million, they did nearly that last year in the improvement in EBITDA, so that would be achievable. And then hopefully the outcomes are okay. They could easily hit this 950 million of EBITDA, adjusted EBITDA this year. And then you're thinking, well, actually, this isn't that bad of a value. So I'm a little bit more confident now looking at these numbers that actually I think they can get there this year, which would be really good to see. And then you can also see here the favourites of the sports betting side of it, and you can see 2024 and way above where has ever been on recorded, and the next highest was back in 1991, as you can see here, which puts it into context. Yeah, that's how much of a big headwind that these guys have kind of had at the moment. Went through the conference call, nothing major to kind of point out really. They did say that they are we've not heard this mentioned for a while, but looking at they said that we haven't even expanded outside of the US and Canada, but we could explore longer term opportunities in 2025. We'll see where they potentially go with that. Obviously, they mentioned maybe that Mexico market. We'll see if that does happen or if it's somewhere else that they're potentially need to look at. I think it would be good for them to look at a new market potentially, just in case these iGaming and sports betting site new states don't come online. We'll see if they do. Question-wise was mostly on the conference call talking about where the improvement of the handle can be. You know, they're improving the handle year by year. I think they're aiming for 11%. I think a hold rate up to 11%. I think it is next year. Talking about the great start they've already had to this year. There wasn't really many questions that I felt like gave more information from what was in the conference call. I would have loved to hear things like how the New Jersey state, I mean, Jason Robbins did say New Jersey is still growing rapidly, which we still are aware of. So when you mature market that's been online for 8 years is still growing at crazy rates, that's great for the business. But I'd love to hear what like the numbers are inside the DraftKings side of it. Only thing I didn't like about what was mentioned on the in the conference call was they're potentially looking at maybe taking on a little bit more debt to use that cash for other opportunities. I don't like the use of debt to pursue other opportunities. You know, get to profitability, then use your profit to do that. I just prefer companies with cleaner balance sheets. Only thing I didn't really like, but obviously if they feel like they can get the right opportunities, I'll judge it then, but maybe a little bit of a negative there. But yeah, overall, I mean, I was looking at DraftKings and I looked at the numbers and I thought, yeah, we knew it wasn't going to be a great quarter because of the sporting outcomes. And that's what it was, but the guidance still seems very strong. The actual numbers themselves in this period, in that Q4 earnings, were probably, I'd say, a 5 out of 10, really. But we kind of knew it was going to be that because of the sporting outcomes. The guidance looks very strong. You know, when we look at a guidance point of view, which is probably the most important part, I'd say the guidance is probably a 9, 10 out of 10, which is the key thing because that's what we do when we're investors. We're looking at the future. We're not looking backwards. And We talked about DraftKings being, you know, not a bad valuation. It's now jumped up to a 44 forward times earnings, which is probably a lot fairer for a business like this. Previously, you know, I think when we were talking about it, I think 30 times earnings was just probably forward earnings, which is way too cheap for a company that's growing at 30+% with major growth drivers still. 44 is a lot fairer. I could argue the case that if by the end of the year, if they do hit the full numbers, then I would see the stock go higher. So we'll see. I think the jump in the share price recently probably reflects the financials a lot more. And then if they do hit the full year guide, then I think we can carry on from there. And I think the stock will be on its path to pushing towards $80 from there. So yeah, overall, a bit of a mixed bag. But what we see still is the direction, the fundamental direction of the company is still very much stepping in the right direction, which is, you know, really good to see. And I'm happy with the shares I own. I think I'm up around about 80% of my position right now. And I hope some of you guys as well are still doing well off this position as well. So yeah, overall good from DraftKings. And let's look forward to those Q1 numbers because I think there could be very impressive numbers when we hear about them in about two months time anyway. So thanks for watching, guys. See you in a bit.